name is Gabby Parker, and I am the executive accountant for Genovations Accounting. And we're here today to talk about business taxes and individual taxes, which is the hot topic right now. I have one of my clients, Chris Cameron, here with me, and he is the manager and owner of Center Street Media, a media production company here in Nashville, Tennessee. So I'll be answering some of his questions about taxes.
Awesome. Well, thanks for having me.
Yeah, of course.
So I think taxes are a hot topic right now because of when it is. We're just not. It's February 5th, right?
Yep.
My birthday was yesterday, so
that's
why I know the day. But tax season's coming up, and so I think it's like hot time for anybody who owns a business. Mm-hmm. Like we got like a month. Yeah. And then for my personal taxes, I've got like 2 months. Yep. Before stuff's due. So yeah, I'm thinking about taxes. Yeah. I'm also thinking about taxes because my social media feeds are like flooded with like. I'm a small business owner, so I think people target me, on social media, but they're like, you should do this and not
so
this,
much content out there.
Do this thing and not this thing, or do these 5 steps to whatever. So I think really my first question, I think this is a kind of maybe specific because I am doing business in the state of Tennessee, but you're also in the state of Tennessee.
Yep,
so
also in Nashville.
What are the Tennessee specifics that I need to be thinking about as a small business owner when it comes to like my business taxes and my state filing?
Yeah. So Tennessee is known as a no income tax state, which is very advantageous for people who live here, and is something that draws investors into our state as well. So that is really helpful for individuals. As far as businesses, though, Tennessee has one of the higher tax rates for state taxes and local taxes. So in terms of sales tax, the state charges 7%, and then local taxes can bring that 7% up to 9.75%. Depending on where you are. So sales tax can get up there in terms of purchasing things or items in the state of Tennessee. Mm-hmm. For property taxes, Tennessee is also a good state for that. They're relatively low on the national scale. They vary by county and city, and the amount is based on the appraised value of your property. So it's also relatively low. So in summary, the income tax is a major draw, like there's no income tax, but sales tax can jump to 9.75% in certain counties. Businesses in the state of Tennessee also have franchise and excise and business tax charged to any LLC, S Corp in the state of Tennessee. So franchise and excise tax is 6.5% of your net income for your business, plus 0.25% on every $100 of assets you own as a business. So if you're a media production company, you have cameras and gear and lighting and all the things, it could jump up to like several thousands of dollars of equipment. Depending on how much the book value of that equipment is in that year, you'll pay 0.25% on every $100 that's worth. So it can jump up if you get to like $100,000 of assets, but if you have like $10,000 in your book value of your assets, it's going to be pretty minimal at $100. So franchise and excise tax, is pretty much 6.5% of your net income, plus either $100 or higher for your assets. And then business tax is $22 minimum for any LLC. It's just $20 for the entire year. And then you get your business license. And the state of Tennessee actually changed this in 2023, and they came out with a minimal activity license. So if your business does under $100,000 of gross income in that year, you can file what's called a minimal activity license and not have to pay that $22 fee. So it's a little bit of savings, and you get to keep that minimal activity license however long you make less than $100,000 of gross revenue in a year.
Like I would file that myself, or like my accountant files that on my behalf?
Yes, so you can create a login in the Tennessee Department of Revenue's site called TennTap, and you can connect your company's EIN to that and get a state sales tax, business tax, and franchise and excise tax number from that. Okay. And do it yourself. If you have over $100,000 of gross revenue and have to file both, I would recommend looking to a professional to file that for you. Because at that point, if you have over $100,000 of gross revenue, you're probably having a professional file your personal tax return anyways. Right. So just ask them if they can also do your state taxes. It's easy for them to lump in to their services, and it allows you to have that kind of accountability to your numbers and make sure it gets filed on time, as the time or the deadline is the exact same as your federal return.
Gotcha. Yeah. Okay. So I think then, since it's Tennessee and I do have some state taxes I have to pay, not personally, but my business will. Yeah. So I've lived in Tennessee my whole life. I'm not real familiar with paying taxes to the state. I only pay federal taxes. So how do I actually file my state business taxes?
Yeah, so Department of Revenue called 10tap.gov. You go in there, and once you have your state sales tax and franchise and excise tax accounts open, so there'll be two basically windows on the portal. You can select that. It'll lead you through a series of questions. It says what's your net income for this year? When did you start your operations? Is it an LLC or a partnership? Those kinds of things. Submit, and then you file the payment right in that portal as well. Okay. You can either pay with your debit card or your credit card. So it's right there, all easy to pay right before the deadline.
Okay, and is that also where you'd pay your quarterly taxes if you're doing quarterly?
No, quarterly is quarterly state tax or quarterly federal tax.
Oh, I don't know.
So quarterly taxes are for federal taxes.
Okay.
So that's the IRS.
Okay.
Yeah, that's separate. So the irs.gov website,
it's a different place.
It allows you to submit payments there for your federal return.
So state taxes you only have to submit once a year.
Yep.
But your federal taxes you pay quarterly.
Yes, correct.
Okay, gotcha.
And the state doesn't require you to do quarterly, and there's no fees for submitting it all in March or April. The IRS will charge you interest if you don't submit quarterly tax payments, no matter what. Yeah.
IRS.
Yeah.
Okay, well, I think that's probably covers some of my business tax questions.
Okay,
but
great.
Then my personal taxes.
Yeah.
I think my real first question is for the last, I've been paying taxes. I guess I've been filing tax returns ever since I started working.
Yeah.
So for 20 years now.
Yeah.
But, I got married when I was 22 or something like that. So married, filing joint. I've mostly only done my own taxes.
Yeah.
And my income has traditionally been fairly simple. My first job was at the UPS store, so I got a W-2 from there.
Okay.
Then I worked at Chick-fil-A for 7 years, so I got a W-2 from there.
Yeah.
Just single things. But now my taxes are a little more complex.
Mm-hmm.
K-1s and some W-2 stuff. My wife works. We have some 1099 income.
Mm-hmm.
So I think my question is really, what's kind of the gauge for when I need to reach out for help and get professional help on my personal taxes?
That's a great question. So as a tax preparer, I would say generally if you have multiple sources of income with multiple types of filings, that's when you need a professional. Even if you have multiple W-2s, it's all the same type of filing.
Right.
Just do it yourself. I personally recommend Free Tax USA. That's the one that I like the most. But if you have a W-2 and a 1099, that's when you may want to consult a professional. If you have an LLC, if you have an S-Corp, if you have investments, if you have real estate, definitely want to get a professional involved, as there's ever-changing laws and ever-changing credits that are available to you as a business owner or an individual, and they can help make sure you're aware of those.
Yeah.
Another concept that people talk about is time is money. So if you know that filing your personal return will take you about 2 hours, and outsourcing to a professional firm like ours is $225. If you could bill out $225 or more in that 2 hours of your time and make more than what you paid me, then it's worth it to you.
For sure, right?
Even if you only have W-2 income, if you can bill out more, make more in those 2 hours, then for sure outsource to a professional. Time is money, and you want to be aware of that as well.
Yeah, that's smart for sure. Because at that point, it's a win-win, right?
Yeah.
You save the time doing your taxes, but then you get the extra
and then
work.
You get to do what you love instead of sitting there trying to figure out your tax return for 2 hours.
Yes, which is definitely a thing. Because as a cinematographer, I can do stuff with a camera in my hands, but when I sit down and look at numbers for too long, I'm a little...
and I'm the opposite. I would rather sit down and do the numbers, and you can do the filming.
That's why we work well together.
Yeah.
So on my personal taxes, I think I have a question that probably a lot of people have. I'm married. I have 4 kids.
Yeah.
Like I said, I have those various types of income. I've always just taken the standard deduction, right? So I don't even... I think I might know how to itemize in the software I've used. I've used Free Tax USA. At what point should I even think about itemizing? Maybe I already should have thought about it. I don't know. I've always just used the standard deduction. So what what is that? And should I use it, or should I think about a different thing?
So the standard deduction in 2023 was $13,850 per individual. So as a married couple, you'd get $27,700 automatically deducted from your taxes, but from the IRS. That's on the federal individual level. So on the business level, it doesn't necessarily apply. It reduces from what's in your individual tax return. So 27.7 was 2023, and then in 2024 they've increased it to $14,600 per person, which is, quick math says, $29,200 for the both of you. So in terms of taking the itemized deductions, they're mainly comprised of charitable contributions, medical expenses, real estate expenses like interest, primary residence expenses, but you have to add all of those up to more than, in 2023, $27,700 for it to make sense. So if you're nowhere near 27.7, don't even worry about it. Don't spend your time on it. Most of the time, business owners take the standard deduction, unless you have high charitable contributions or high medical, because you can take a lot of deductions on your business return by spending that money or getting credits there.
Right.
And then when it pushes to your individual, that is not typically so much, and you can just take the standard deduction and it's helpful. So taking the deductions on the business side is often more advantageous and worth your time. Not very often will people have more than 27.7 in medical, charitable contributions, those kinds of things. So I wouldn't waste your time on it personally.
Yeah, I guess unless you're like a big philanthropist or something.
Yeah, unless you're a philanthropist or you're
probably in a different tax bracket at that point anyway, right?
Yeah. 27.7 is really a sweet spot for a lot of individuals, at least that I've been working with in Nashville, for the income levels that people have. Yeah.
Yeah, I mean, you'd have to make a lot of money to just donate more than almost $30,000.
Right, yeah.
I guess medical, I didn't think about that too much, but you'd have to spend a lot of money on medical stuff.
Yes, and medical only applies if it's over 7.5%, or up to 7.5% of your gross income. So you can't even take all of your medical. It's after a certain threshold is reached. Then you can take those as deductions. So that's not even reasonable for people either.
Yeah, that's maybe makes it even harder to hit the threshold.
But the 27.7 shouldn't even reduce your taxable income to zero. It should reduce it enough where you maybe get to a lower tax bracket. And then you're only taxed at like the 22% or the 15% bracket instead of, let's say, the 25% or 24% bracket. So it's not supposed to bring it to zero, but it is supposed to help bring you down maybe a bracket or maybe two.
Yeah, well, that's helpful. So one of my questions, and again, I think I get targeted with a lot of this stuff on social media, but I feel like the people from like the certain camps of financial advising, they're like, if you get a tax return, then, on your personal taxes, like if you get a refund or whatever, then you just gave the IRS a 0% interest loan for the last year.
Okay.
Because I've got a lot of kids, right? I've pretty much always, I think, gotten a tax refund. But should I restructure my withholding to where I get a smaller refund? Is that smart, or is it risky? I feel like it's risky, but I don't know.
Well, for you, it seems that you want to ensure you've paid your taxes and don't want to owe anything on April 15th.
Right.
That's one of the goals it seems that you have. Other people don't mind. They're like, I would like to keep all of my money all year and owe $7,000 on April 15th. And that's how they roll. Yeah. So it depends on what kind of payment plan or what kind of business person you are. Like if you want to exceed your tax liability via withholdings and you want a refund every year, that's how you want to function. Sure. Some people like it because they're really bad at managing finances. So they're like, take it from me. I don't even want to know I have it. And then give me back what I'm owed on April 15th. And that's how they roll. It's really hard to calculate the specific withholdings that you should have because tax incomes change so frequently. You could change a job, even the rates change. Right. Depending on part-time income, anything could change. So I always recommend people overestimate their withholdings because it's nice to get a refund. But if you need that cash now to invest into something you're doing that's going to make you money, then you owe money on April 15th. Maybe that's how you need to roll as well because you're starting up a real estate investment group or you're starting an LLC or something. You need the cash now. Depends on that timing as well.
Yeah, that makes sense. So it's like, I think I've operated from the place of I don't want to get pinged with taxes when, a tax payment when the thing comes around. So I've always just defaulted to the take it that idea, but I do see how if I were trying to, I guess the idea is I would think if I'm going to use the money to make more than what I would have owed the IRS, then obviously it's a helpful thing to do at that point.
If you need the money to repair an Airbnb that you just purchased and then you're going to make $5,000 on that in the next 5 months, you got to do that. Again, the IRS charges a penalty anytime that you don't make quarterly payments or don't have withholdings. So you just got to weigh the pros and cons of your...
No, not on personal though, right? You don't have to make quarterly tax payments personally.
A quarterly tax payments are on your personal return because an LLC is a flow through. So whatever you would report on your personal return. So like last podcast, I talked about the safe harbor rule. You know, you pay a certain amount of your last tax return or in quarterly payments to avoid a fee, even if you owe more. Quarterly payments are for your personal tax return because at the federal level, it's all flow through.
I watched the last podcast because I'm a fan, but I thought you were talking about business quarterly taxes.
Oh.
I didn't realize it's personal because I've never paid personal quarterly taxes because I've never owed taxes.
Oh, okay.
That's the only reason I've never gotten penalized,
but you have 4 kids, right?
Yeah.
So that helps with the child tax credit
right?
Because then it gets you more money back in those credits.
I haven't always had 4 kids, but
right.
I mean... I guess as I've made more money, I've also had more kids.
Yeah,
so.
right, because they cost.
But so like the idea though is like if let's say like next year I did owe the IRS even $500, but I didn't pay quarterly on it, I would get penalized.
Yep.
Wow.
Yep. And it comes, even if you pay, let's say you pay the $500 on April 15th when you file, you'll get a letter about 6 to 8 weeks later that says, hey, we got your payment, but here's your penalties that we charged you. And then you have to pay that.
Dude.
Sometime in May, June when we get the letter.
How do people know?
Yeah, that's a great question. Listening to these podcasts. The IRS doesn't publish, this information other than their website, which is like IRS tax code jargon that tax professionals have to decipher.
I wouldn't be able to read that.
Yeah, translate for people.
Wow.
Yep.
That's super helpful to know.
Yeah.
So
like my husband and I, this is the first year that we'll get a refund. But last year we owed, I think it was $600. Mm-hmm. We got charged a penalty 6 to 8 weeks after we filed the return.
Because you weren't paying quarterly?
Because we didn't pay quarterly.
That's wild.
Mm-hmm.
You didn't know either?
Well, I did know, but I thought withholdings were coming out of his paycheck, my husband's paycheck, and they were not. So that was also my mistake, where I didn't look at our paychecks. I thought withholdings were coming out the whole time, and they were not. So on the withholdings for this year, I increased it to add an additional $100 per paycheck to make sure that we could, get a refund this year instead of paying taxes.
I filled out the document. We recently did it because my wife got a new W-2 job. But I don't. When you're we increased it to make sure we did an additional $100 a month. I don't even know if I would know how to do that on that document. How to. It's I guess I would just thought it was an all or nothing kind of thing.
On the W-4?
Yeah.
Yeah, so there's a line on there that says if you would like additional withholdings, just note on here which they would be.
Because they're by default going to withhold the FICA,
federal,
all those
the federal rate,
FUTA, SUTA, whatever things.
Yeah, well, those are separate.
Okay.
Those are employee taxes, and then withholdings are a separate calculation. So the federal, whatever the federal rate is, and they actually increased.
And that happens no matter what.
No matter what.
Gotcha.
They increased the federal rate in COVID to help people out, but now they've been cutting that back down to the normal rate. So 2023 was a shock to a lot of people because they had such little withholdings, even though they changed nothing on their W-4. Mm-hmm. So a lot of my clients have had to put an additional amount taken out of their paycheck because the standard amount is not enough for them.
Oh, wow.
Yeah.
I don't know. I haven't done my taxes yet this year, so I guess we'll see. I don't, but I've not, like I said, I've got 4 kids, so I don't think I'm in too much danger, but
right.
Maybe.
It shouldn't do much danger. And even if you do owe, you shouldn't owe so much that the penalties will be extreme. Yeah. But yeah, I definitely missed that withholdings on my husband's paychecks, and it hurt us. So then we got penalized, but then I paid attention to it in 2023, and we're getting a refund.
Yeah.
So
it sounds easy to miss. That's tricky.
I mean, you just get your paycheck and you move on,
Right. Okay, so I guess my last question, I think this probably applies to my personal taxes and my business taxes, is what are the dates I need to keep in mind for filing? Because I don't think they're all the same, right? I'm real used to that April 15th date. Yeah. Because that's been my whole life. But business isn't quite the same, right?
Yeah. So individuals often reach out to me the first week of January. They're like, hey, when can we get started? I'm like, well, hold on. It's January 5th. We just wrapped up the year. But 1099s and W-2s have to be sent out by January 31st. So people may not even get those documents if they're mailed until the middle of February.
Right.
Also, the IRS doesn't even open up their portal to receive returns until the last day of December or January, the last business day of January. So we can't even file returns. This year it's January 29th. They opened up January 29th. So just a week ago, that's the first time we could submit any tax return. So that is something to consider when starting your return. And then if you own a partnership, if you're in business with somebody, that's due March 15th, as well as C Corps. So March 15th is that deadline. That is also the deadline for your state taxes. Okay. So you have to file your federal 1065 and your state taxes, business and franchise and excise, at the same time. April 15th is when individual tax returns are due, as well as single member LLC, as well as those state taxes related to those single member LLCs. So for you, it'd be March 15th for your business. You'd get the K-1, and you'd also submit the state taxes at that time. And then you use your K-1 to file your personal return by April 15th. No state taxes then because you already filed them by March 15th. Those are the basic deadlines for tax season. And then extensions for partnerships and C Corps is until September 15th. And the extension for a single member LLC is until October 15th. So it's a 6-month delay. Yep. And anything after that, if you don't file by that time, is penalized by the IRS.
Yeah. Yeah. All right. I mean, yeah, those are important to keep in mind. What's the deadline for when I have to file for an extension? Like if I know I'm not going to make it, can I do it can I on April 14th be like, hey?
Yep. Definitely,
really?
Yeah. Any time before or on the day that your tax return would be due. So for your business, if you're like, I'm not ready, it's March 15th, file an extension. By that point, you should have known already. You should have filed an extension maybe a week or two before. But if you're really trying to crunch it, you can file an extension on March 15th and have until September 15th to do it. But then you have to submit a second extension filing for your personal return.
Right.
It's not the same.
Right.
You have to have 2 different filings. Yep.
Well, great. I mean, I think that's super helpful. I feel like this is like super helpful content for small business owners.
Yeah.
And, because I think every small business owner also has a personal tax return they have to file.
Yep.
So there's this kind of double consideration, which I guess is just part of doing business.
Yeah.
But, like I said, I'm a cinematographer, right? Like I film stuff.
Yeah.
I didn't go to accounting school to learn any of that stuff. So I think that's super helpful. There's a lot of really good information in this that I think will be really helpful to a lot of other people.
And something else you may want to consider too is if you're going to file your personal return yourself and you own a business, it's nice to have your business financials done and completed by December 31st for the year so that you have that profit and loss statement or you have the balance sheet or whatever records you have ready January 1. And so then you can focus on collecting your other information, your 1099s, your W-2s, charitable contribution statements, whatever it is. And QuickBooks actually has an assisted bookkeeping platform that you can pay like $50 a month for to have them enter your transactions and do your bookkeeping for you if you're a really small business. And that helps relieve the pressure of getting all that information together come January. And you're like, what happened last March? I don't know. I don't remember. It was 9 months ago or whatever it is. Our firm also does bookkeeping. So our recommendation is that if your business makes over $50,000 of gross income, you should outsource your bookkeeping to our firm or to a firm like ours so that it is seamless to have your business financials exported at the end of the year and your tax return done. That also gives you like every month you can see where you're at with your business instead of just looking at your business bank account, because those two may not align, whether you're accrual or cash or what.
Yeah, that's tricky. Yeah.
Yeah.
If let's say I do hire a firm to do my business taxes, would it be typical that same firm does my personal taxes? It
is typical. We've had some clients where they have 3 businesses, and so they'll have one firm do 2 businesses, one firm do the business and the personal return of the owner. So that there's 2 forms there, but usually the businesses are very different. Like one's a real estate and one is a media company, so they're very different in terms of how they function. And so that accountability and additional perspective is very helpful. For a lot of our clients who have like one business, maybe 2 business endeavors, they just put everything through us. And then what that allows us to do is take their business return, file it by March 15th, and then we immediately use it for their personal return. So it's a very seamless process. There's some transfer of information, and it saves time and cost.
Yeah, it seems like you could really keep it all in under one roof in that way, and it would help like enter information less, and just they'd have it all in mind.
Yeah. And I can't speak to how other firms do this, but our firm has multiple tax preparers that have specific responsibilities. So the tax preparer that does your business return won't be the same tax preparer that does your personal return. So we have multiple eyes on it as well to catch any potential errors before it's submitted to the IRS.
Yeah, nice.
Yeah.
That's awesome.
Yeah.
Well, thanks for having me on today. I really enjoyed getting to talk money with you. It's not something I usually enjoy talking about. Like I said, in my line of work, we don't have to talk money too much. I guess we have to talk budgets, but not tax stuff. But it's super helpful. Thanks a lot.
Yeah, of course. Thanks for joining. And thanks for watching. Don't forget to check out the description for links to our social media. And remember, don't stress your success, and see you next time.